Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 182, NASDAQ up 95, S&P's up 30, gold contract up $4.50, traded at $1,249 an ounce. Silver up 15 cents at $17.50 an ounce. Platinum up 12 bucks at $1,280 an ounce. Copper up 4 pennies at $3.02 a pound. That got back inside the range. Looks like copper wants to go higher. Oil flat at $82.81 a barrel. Bonds, we have the 10-year down 4 ticks at 127.21. 30-year off 13 ticks at 142.22. In both cases, folks, they can't push bonds lower. They want to go higher. King dollar up 362 ticks at 85.40. And there's some divergence there. And what that divergence is that you have King dollar up. Bottom line, gold is also up. What I expect you have in here, though, King dollar's in an ABC structure on the way down. Euro down 76 ticks at 127.28. Euro, the yen down 11 at 106.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is as cool as you can get, folks, okay? ICE is 1936.98. We've hit 1938. Right now, you're at 1935.84. If you come over to the SPY and check this out, this is going to be an interesting close out here because it's going to be hard for the market to go south at all with Europe closing at its highs. However, we're right at ICE. If we take a look at the SPY, what you have is this. We're at 193.64. The one number is 193.65. We've got to a price point today out here of 193.75. We've done 114 million shares. You're going into 221. So the real key is here, can it close over this 193.65? And we're going to be teetering, and the bottom line, the fight is on with this particular case right here. That was coming, we've come off that bottom. We established that bottom last week. The bottom on the SPY is 181.92. You have a high volume low, so that's going to get tested. No ifs, ands, or buts about it. You come off that low, and what do? On Thursday, we did 270 million shares. That's when the SPY went from 182 to 187. Friday, you do 214 million shares. That's when we went from 187 to 189. That was option expiration, which it should have got juice. Yesterday, guess what? You talk about a contraction of volume. We did 130 million shares. And today we'll probably do 130 also. So your correlation is you're blowing downtown with 380 million. You're going into resistance that had 221 million, and we're going to do all of about 130 million. This is a very large ABC structure on the way down, folks. It's a 199.A to B structure. So the real key is going to be, can it hold the 1936.98? Because if it holds that level, that baby will get all the way up to the 1970. It's that dramatic. So this is the line in the sand right here. We'll see where this shakes out as we're getting into the close. We take a look at some of the percentage structures. NASDAQ is up 2.2%. S&Ps are up 1.7%. The Dow Industrials are up 1.1%. We go over to the NASDAQ Composite next. We look at the composite, and we have what the composite is this. Composite right now is at 4411. ICE was 4380. So you're over that, and that's saying, guess what? That's saying the composite can get up to this 4464 level. You take a look at the 3 Qs, the NDX 100. Inside the NDX 100, this is just coming into ICE. If I were to chart the S&P right now, this is the baby that you can also go and short at. But bottom line, we flipped out that S&P today. The Qs, we're at 96.69, and 96.83 is ICE. We made it to 96.71 thus far. We'll see whether it can make it up there. Your correlation is 77 million. And right now, we have only done 41 million. Yesterday, the contraction, we did 41 million. Bottom line is that this also is the B to C leg of a very large ABC structure on the way down. Gold contract. We go over to gold. We take a look at gold. What you have with gold is this. Where we did 139,000 contracts, and that's good numbers, folks. Big time, too. We got to a price of $12.55. Right now, we're $12.49.10. This baby wants to trade up into this $12.97 area. We get another day of strength, and that thing is going to be up to the $13.47 area. Bonds. We go take a look at the 10-year bond. 10-year bond next. With this, what you have with bonds. Bonds just won't back off. It's pretty amazing, actually. We did 1.3 million contracts out here today. You really get a flat market. You're going into, however, 4 million contracts, and they just can't get a crack down below this 127.07. We hit 127.14 today. 30-year. We take a look at the 30-year bond. What we have with the 30-year bond is that 314,000 contracts. We're at 142.21, and that can't get it below that 142.13 area. It's a big number that they can't push it down after that number, folks. Pretty amazing. King dollar. Now, hey, this is where it's going to get really cool. So we go take a look at King dollar, and what we have with King dollar is this. King dollar today has done 3,100 contracts. We are at 85.39, and here's where the divergence comes in. Gold hasn't got whacked, and, my take is King dollar's in an ABC structure on the way down right now. Now, you're getting a little juice in King dollar today. I mean, there's a little volume behind this move. What you're doing, however, is that you're coming into 116,000 contracts on the way down. We've done 31,000 today, which is good. So we'll see how this shakes out when it's trying to get into this 85.53 area. Right now, though, King dollar is in an ABC structure on the way down. That more than likely is going to take it down somewhere about the 83.90 to 82.90 area. Our phone number is 877-927-6648. The Dow Industrials, they just juiced the Dow. This is really cool. Folks, I'll tell you, counter-trend bounces are so where it's at, especially when a market that's highly volatile. So the Dow right now got up over 200. It's at 199 right now. Inside the Dow Industrials, which is putting juice into it, is that you have Intel up 98 cents. You got Chevron is up 345. United Health is up 234. Cisco is up 60. Taking it away on the way down, Coca-Cola is down 282. We're going to get into that. Coca-Cola, as you talk about downward volume, man. Same with IBM. IBM yesterday and today. IBM is trading 166. McDonald's is down 61, and Procter & Gamble is up 11. If we go over to IBM first, okay, IBM came out with their numbers yesterday. You talk about a dog, man. IBM is in big trouble. This is an equity that has been teetering for the last 2.5 years up there, and what you do have, this is just how large companies, folks, spend a fortune buying back their stock, and when that runs out, that's it. It's all over. IBM broke everything, going all the way back from the July 2011 price point. Right now, we're at 162.36. She's going to go after the 157. You break 157 on IBM, you're going to 116. It's curtains for IBM. Coca-Cola. We take a look at Coca-Cola. Coca-Cola come out with numbers out here today. Coca-Cola gap down, huge volume. We did 44 million shares thus far today. We put this on a monthly basis, and what you have with Coca-Cola, we're at 40.42. That's on the way to 35.55. And in IBM's case, by the way, too, folks, what you do have is that that is going to be a substantial hit to a couple of portfolios in Berkshire Hathaway. Berkshire Hathaway, in the last filing, had owned 70 million shares. They're the largest owner of IBM, 7.9%. But what they also did is this, which is really intriguing of the last filing. They also started another portfolio with 3.1 million shares, and they had just bought that one. That was a brand-new portfolio. So bottom line, they got about 74 million shares of IBM that is toasted and roasted. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow is up 192 right now. Nasdaq up 97. S&Ps are up 32. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon update when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials up 200. NASDAQ is up 99. Some big numbers out here. You get the S&P's up 33. They're pushing into the close, no doubt. And we go over and we take a look at this futures right now. So we have the E-minis up 33 bucks. You're pushing. And the last time intraday here that we had any volume was at 9:30 this morning. You can even bring it to 11:30. With that, so that we're at 1933. That says 1925.50 is game. On the way back down, folks. So yes, you push with volume. lighter volume going against your downdraft. That's a counter trend bounce. CMG. Chipotle came out with numbers yesterday. If you want to see how gaps get filled, folks, this is just nasty. Down $40. Huge volume, 1.8 million shares. Chipotle had gapped higher in July. July, when they come out with their numbers, great numbers, and these are good numbers now, too. The bottom line is that what they said is that their sales, they just expect them to slow down like 20%, and they're doing 30%. You have, in July, on the 21st, it closed at $589. Following day, it opened up at $649. You get gaps like that, folks, they get filled. Your first identification that it wanted to get filled, it went sideways from July 22nd, going all the way over to the 17th of September. And what you can see real clearly, as you got into that gap, so the bottom of that gap is $649. As we came down, we made $650. And what did you get? Well, you get an expansion of volume. We're hitting highs out here with 303,000. You go down, 519,000. Next day, you go sideways with 400,000. Next day, you go down with 530. Now, watch what it does. It tries to get back up, top side, can't do it. Goes from price point of 642, gets up to 680. Wicked contraction of volume. You do 379,000, and then it starts heading into the gap again. Bottom line, I think it's down now. It's down 42, but that gap is not filled. That's the first part. Bigger is that now you blew downtown with volume. So what this sets up, you take this back on a 2-year basis. What it sets up, number one, is that it wants to hit the bottom of that area, which is 582. More than likely, what you're going to see is it's going to go back to 511. That's going to be a very large hit. And something that does decent numbers. McDonald's, MCD, McDonald's come out with numbers this morning. McDonald's is holding the low out here at 90.96. That's down off $104. You put this back on a monthly basis, however, and was screaming for McDonald's, is $64. McDonald's, these large caps, folks, well, you get a couple different things that end up happening. The large caps, in general, are going to have a problem because of the fact that the dollar had gone fast, far, and up. That's the bottom line. That's the first part. The IBMs of the world, the McDonald's of the world, you have a lot of things changing inside the industry as to who's giving business to IBM, who's giving business to McDonald's. Let's go to Terry in Orlando. Hey, Terry, what's going on?
Hey, Tom, how are you today?
I'm doing great, man. You having a good day out there?
Yeah, a little cloudy, but nice weather.
Cool, man.
Yeah. Hey, listen, I know we've seen gold inch up a little bit here, and you've got some new buys on the gold report. I was wondering what you think of Franco-Nevada, FNC.
I like it. I can tell you this, folks. I like what Franco-Nevada's doing, and I like what Royal Gold is doing inside the context. Now, both of these are royalty companies. Franco-Nevada is stronger than Royal Gold. The main reason I didn't buy it today, we analyzed this, folks, is that the reward versus the risk, money management-wise, is not there because, it's off the bottom of that 46. It's up at 54. It's like, okay, so I got to put the stop somewhere into, 50, even, it would have to go into 52. But my take is that this thing wants to go to 61. I like how this is set up, man. It's backing down 123 today, but you can see when it pushed in on the 15th, it had volume up there. It had volume on yesterday, as it pushed into the 55, 56. And then what I'm taking into consideration also, though, if we go over to Royal Gold and look at the same deal, Royal Gold is just laid up to basically try to get up and over the strength that it had at 69.30 also. So
for entry, you'd be interested if it was back down in the lower 50s?
Yeah, what happens when you have a sign of strength like they both did. Well, okay, let's put it this way. If you're going to do Franco-Nevada, now it's different with me doing it in a newsletter because the explanation has to be so intense, right?
Right.
But here, the way that I would do it is that you're at 54.12. This should not get into 52.21, and that's the highs. It could go touch it, okay? If you're down there, then yeah, you could put a stop like 2 points underneath it, and then you're gunning for the 56, which is the highs of a few days ago, but you're actually gunning for that swing high up there of the August 18th, August 14th. You know?
Okay. All right. Great. Appreciate it. Thanks.
Okay, man. Have a great one. Have a safe one. Right. Let's go to Eric in Alston, Mass. Hey, Eric, what's going on?
Hey, Tommy, how you doing?
I'm doing great, man. You having a good day out there?
Real good day.
Cool, man. So we're going to look at microchip technology.
Yeah. Okay,
let's take a look. It's MCHP. The low's 36. The high is $50. Look at this. Interesting, man. Okay, so what are we doing with this?
It's something I've held long term, but
okay.
I keep thinking maybe I should dump it.
Okay, so let's take a look. I'll put this on a monthly. It's got hit pretty hard here.
Yeah, it looked like they had volume too, didn't it?
It had volume off the highs, yeah. So 4150. Yeah. Yeah, you want to move this out, man. Okay, so watch what's happened, even at this point. So on a monthly basis, thus far we've come down at 65 million. The real problem, Eric, is see how it's come back inside 42.46 and 41.50? That's like, oh, man, you're in the lower range again. When you're in the lower range, that's trouble because what is sticking out there is 29.55, man. Well, actually, the first one would be, yeah, it'd still be 34, man. You know, you can see how this went. I mean, just like the rest of the market, it went up there with no volume. So that'll come back and test that lower level, which is 34.50, man. Particularly, you know, so on a counter trend bounce, it's not bad. Do you know what I mean? It's like, okay, so you get the gap away. You're going into that today. You're at 40.61. The top of that gap is 41.07. You know, it might make it. I mean, it's hard to... Well, you know what you could do? The way to do this is... Let me just see something. The way to do this is bring a stop up every day and really put it in tight. Okay, so they're coming out with numbers on the 30th of October. I would not stay in that as you just get out there before that. Get whatever you can get out of it, man. You know, because when you get one gap like that, most of the time they don't come in ones. No, they don't. You know what I mean?
Yeah.
You got a twin coming up, brother. Okay, man.
Thanks, Tommy.
Have a great one. Have a safe one. 877-927-6648. You get the Dow up 220. Nasdaq is up 102. S&Ps are up 36. You stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials up 201, NASDAQ up 98, S&Ps are up 33. You have Honeywell up 277. Let's see, Walmart's up $1. ExxonMobil's up 191. You got Coke down 285. Oxy's up 239. Let's go over to the XLE. The XLE, folks, is the oil and gas sector. XLE is up $2.50 today. 26 million shares traded. And when we take a look at this baby, this is just a classic. XLE had, the A leg is from $98 on the 29th of August all the way down to 77. You're down with some big juice. You're going back up with lighter volume. If we go over to ExxonMobil, XOM, we take a look at that's the largest weighting inside that structure. What you'll see is this. These are dead cat bounces. We're up 188. You're trading at a price of 104. 93. The high was 104. This is a large ABC structure on the way down. This is really sweet how all these markets are basically lining up, folks. They're lined up in a big way on an ABC structure on the way down. And that ABC, so what you have with an ABC structure on the way down and the way up is this. You first get-go, meaning do you have one or don't you, has to do with the volume characteristic, because you really don't know where they're going to stop on the B to C leg. So you get the A to B leg set up. As you go up, if it's an ABC structure on the way down, your volume will contract. And we have that right now in all the indices, folks. The next move is going to be like, okay, what swing point will it fail at? It's just going to be a matter of which one it fails at. Then what ends up happening, as you start moving lower again for the confirmation, what you would see when you start moving lower is you see the expansion of volume. If you get the expansion of volume, the next move that sets up is that how are you going to hit the swing low? In this particular case, the swing that we're talking about on the cash S&P is a price point of 1820. And you can see we're 120 points above that already. I mean, fast, furious, all of the above, we have it all. Then what you do is that you take the 15th, because what would end up happening, if in fact there's an ABC structure on the way down, it would have to blow away the 15th with more than 1.2 billion shares. You can see the Dow is incredible how we're going up. Yesterday we did 742 million shares, and we're going to be lucky if we do that today. So the volume is contracting in a dramatic way. We go take a look at the NASDAQ composite. What you have with the composite? We did 1.7 billion yesterday. The composite will probably do about 1.9 today. The 3Qs. You take a look at the 3Qs. The 3Qs had hit a low out here, was doing 108 million or 44 million right now. The ICE on the 3Qs is 96.83. We've hit 96.86. So this close is going to be really cool watching this whole thing shake out as we come into it. Because what you do have is that, as I said a little bit earlier, it's hard for us to sell down at all when, in fact, Europe closed at its highs. You had the FTSE close 1.6% up, the DAX 1.9. Bottom line, it stayed up there. It closed up there. And what's going to be really cool is this. It's very subtle. When I mean very subtle, when you get over them by pennies and close underneath them by pennies, that sets up a market that's going to go south ASAP. I know, you know, these are great trading markets, folks. That's the bottom line. You know, if you're long and strong, great. Bottom line, long and strong, get your stops in. You know, you just got to bounce out here. If you didn't sell down the first one, get your stops in. Don't think this thing is going to the moon, because guess what? The moon got shot, and the moon is going south in a big way, too, folks, okay? And the proof in the pudding goes like this. Go look at IBM. Go look at Coca-Cola. Go look at Chipotle, okay? These are large caps that, bottom line, are affecting the market. Yesterday, which actually blew my mind, which is really cool, is this. The Dow Industrials. So let's look at the Dow Industrials for a second. The Dow Industrials yesterday, okay, bottom line, traded from price point of 16,260 to 16,401. You know, didn't get over the highs of Friday, but bottom line had a decent day with the aspect of IBM getting toasted and roasted. But this was the clue, folks, okay, is that prior to the market opening, okay, you had IBM trading down 17 points, and in fact, the S&Ps themselves, the future S&P was not accounting for that. Now, when that happens, that is always a dynamite heads up. The reason being is this, is that you have operators that are saying, okay, I got to hold it up as much as I can. And they're holding it up just to get out, folks. That's what's going on. But the correlation inside the Dow Industrials, because IBM is such a big portion of it, is it's laying out there. It's laying out there in a huge way. That's how it's set up. So what you have out here today, Coca-Cola is the biggest drag on the Dow. That's down 289. You have IBM second, and you got McDonald's third. That in itself, saying that those large caps, some of the best companies in the world, are going south. You can finish the rest of that sentence, folks, because the bottom line is that this is a dead cat bounce. It's a monster ABC structure on the way down, and I think it's going to be big problems. You know, it's kind of just written all over the place here. We go take a look at, and as what you know, it's intriguing here. You know, our bond expert in the den, he's talking about that the TLT itself hasn't even been able to get back to 120. This is insane. You know, we hit 120.60. Folks, the TLT is the 20-plus bond fund, right? a normal retracement, could bring it back to like a 119.37 in a heartbeat. You know why it's not going back there? Because no one wants to sell, folks. That's what it comes down to. And they're not selling because they just want to make sure they get their money back. It's not what you make on your money at this particular time. It's just getting your money back. So it's going to be wild watching this whole thing shake out. What is going to be, the dollar correlation right now with the metals is pretty intriguing. Actually, let's go to silver for a second, because silver has a huge amount of work to do in order to get back inside its range. That being said, I like how silver is setting up. Silver is at 1749. It has to get back inside 1870, and that's a huge number. It's absolutely a huge number. What we have had, though, is that it's a subtle, like today, on October 15th, folks, gold, silver spiked to highs. Well, those highs are going to get tested, number one. In silver's case, that's 1782. Nice volume up there, 666,000 contracts. Today, you go sideways, you push a little bit higher, but you're pushing higher, and the volume increased. So what I expect you're going to probably see out here in the next few days is that you're going to see that metal market go topside. And that's on the technical basis. On the fundamental basis, you have the largest holiday, the largest buying holiday for gold in the world in 2 days in India. Okay, you're talking about, this is when everyone buys gold in India. That's what it comes down to. And it specifically starts on the 23rd, folks. It's the Festival of Lights. This year, because gold is lower, I suspect we're going to get even more demand. And if you want the fundamental number on this, is that 25% of the jewelry that's sold per year is sold in India. And I don't know the exact percentages of that sold this coming week, but it's a very large percentage. So I suspect what you're going to see out here, this is how this always works. It's always after the fact that you'll see this. You'll hear next week, gold spikes $10 or $20. What you're going to hear is that, oh, of course it spiked $10 or $20 because that was the festival in India, because it is the biggest festival period. And I suspect that's what we're going to see, because the way these are setting up right now, it's setting up just right that you can get an expansion, and all that will have to happen is that when it won't necessarily have to be the 22nd, 23rd. I expect, though, tomorrow, the next day, you're going to see huge buying pressure inside of that, because what will end up happening is that the merchants that are selling this type of numbers will replenish their gold very quickly. And the only way you can replenish that gold very quickly, folks, is go in the market at market price ASAP. 877-927-6648. We go take a look at. Let's go take a look at Intel. Intel is the leader inside the NDX 100 out here today. And Intel, guess what? Intel's not going anywhere. Up 94 cents. You're doing 26 million shares, going into 80 million. That's not a big deal. Oh, Apple. Let's go look at Apple. Okay, so check this out. Apple come out with its numbers, not moving. Right now, Apple is trading at 102.27, 85 million shares. That 103.20, we come down with 125 million shares. So Apple's going to need a lot more juice to get a lot higher. They come out with their numbers. They sell a huge amount of product. There's no doubt about that. The real key is going to be, can they continue that, and do their margins stay up? The way Apple's trading right now, it's saying no. Dow Industrials right now up 200, Nasdaq's up 96, S&Ps are up 36. We take a look percentage-wise. This is what you have. Dow's up 1.2, Nasdaq is up 2.4, and the S&Ps are up 1.9. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 201. NASDAQ up 98. S&Ps are up 33. OCN. So check this out. Don't even think about touching this stock. This is a financial corporation. They're in the mortgage service businesses. But this little baby, technically what you have here, and this is, when you talk about one gap away, it just doesn't happen. This baby has been down the last year from $60. You're at $21 right now. You put this on a 5-year monthly, and what you're going to see is that this little baby, had the high of 60, and it's going to make its way all the way back to like $14. That's on the technical basis. Fundamentally, this place got big problems. It's dropped the most in 6 years as the New York banking regulator accused it of improperly backdating potentially hundreds of thousands of loan modification letters to mortgage borrowers. Owen fell as much as 23% in the news, the biggest intraday drop since October 2008. The superintendent of the Department of Financial Services said he intends to take whatever action is necessary to ensure that the borrowers are protected. The alleged backdating adds a new layer to the probe, which focused on possible conflicts of interest at the Atlanta-based firm. In several cases, listen to this, folks. This is insane. This is insane that a public corporation is doing this. In several cases, borrowers received a letter denying a mortgage loan modification dated more than 30 days prior to the date that they mailed the letter out. That essentially eliminated the 30 days that the borrower would have to appeal the denial. In light of the serious issues and likelihood that thousands of new inaccurate records are created with each passing day, the firm has approached this problem without the urgency it needs. Bottom line is that it's amazing after the aspect that you had, Bank of America, and I think it was Bank of America was one of the biggest ones, with the robo-signing, going back 3 or 4 years, inside a couple of I'm not sure whether it was the Countrywide or Bank of America or whatever, but bottom line is they got caught robo-signing. That stopped foreclosures for, quite a long period of time, over a year in Florida. This one here, it just blows my mind that how do you get away with that, sending thousands of letters out, backdating them in large companies? It's there, and it's sad, but that's pretty intense. Coming into this closeout here, we are going to have light of oil, and the real key is now going to be where does it close out? It's going to be subtle, and it's going to be subtle in spades out here. The number on the S&P is SPY is 193.65. Right now you're at 193.92. And the Qs, the NDX 100, what they're looking for number-wise is this. The Qs were at 96.74. The number would be 96.83. So the Qs are underneath it. The IWM, and what you're looking for is you're looking for harmony, folks. That's the bottom line. If we have divergence, that's going to be one thing. We have harmony, that's another, meaning all the indices test their swings, have light of volume, close under them. That puts the probability higher that, in fact, the C leg of the C leg of an ABC structure on the way down is in place. On the IWM, it's 110.32. Right now, we're at 110.37. So this is going to be a wild one. There's no doubt about it. And as I said a little bit earlier, where we do have divergence also is this, is that Asia last night couldn't perform, folks, okay? The Nikkei was down 1.5. Nikkei was down 2%. Taipei was off 1.5. Hang Seng was up, was 0.8%. So that is unusual in the case that they couldn't get any traction when, in fact, Europe got huge traction. So we'll see where this baby does shake out coming into the close. If we go over and we take a look at that bond market is saying quite a bit. The bond market is saying bonds want to go higher, markets want to go lower. Let's go to John in Winchester, Mass. Hey, John, what's going on?
Hey, Tom. I just got spanked. I got stopped out of MU. Okay. But good thing you tell me to put my stops in. I would really be hurting. But where do you see that baby going?
Well, what you have, you get Micron Tech. Micron went from, the price point of 34 down into this 50, no, down into 26. You're coming back into ice. Now, Micron, the ice on Micron is a little bit higher. It's 32.18, but it's going to at least test the lows again, you know, of that 26. Now, that's on the daily. If I put this on the weekly, I mean, Micron wants to get down to like 1885, man. I wouldn't be touching this thing. Well, the first stop would be 2450. Where I'm going with that, John, is that's the high of the January 10th swing point. You can see.
Well, I'm looking at shorting it. I was shorting the stock, and I got stopped out today. So. Okay,
so what you want to do, what you'd love to do, is you'd love to see this thing hit the 32.18 because that's where ice is. That's where its ice is in this one.
32.18.
Yeah.
Because it's not doing the volume. I mean, it went down.
No,
83.
No, I agree. It's not. There's no doubt it's not. You know. But, you know, you might get it. You might get it. I mean, this market, you know, basically, you know, it's got up here in price. You know, the juice is not behind it. But that would be, we have your back against the wall. And what happens, folks, at these numbers that we're talking about, these are sweet places because you are going to be right or wrong immediately. This is not a middle-of-the-range deal. You know, like when we're talking ice, if they get over ice and you close over ice, you're going to the next swing point. In this particular case, when we're talking Micron, that's why the trade's at 32.18. You know, because then you can just put the stop over 33.20, and you're going for 26.32 or maybe an ABC structure on the way down.
Because it has a gap, I think, at 34 or something.
It does at 33.87. Yeah.
You think you could hit that?
No.
Okay.
Yeah.
Where do you think this market's going right now? I mean, it's crazy.
This is a normal bounce, man. I mean, this market, you know, first off, the S&P cash is at 1939. Your benchmark, which these large caps have already hit, is 1737. So that's the first stop, man. I can, you know, that's the first stop. We get down there. If we get down there on volume, then it opens up 1343, which is a big problem. But
1343. Where do you think the Nasdaq's going to end up before I can start shorting?
Are you talking about the market?
I'm sorry, the S&P, the market in general. I mean, you see this going on for a couple more days?
No, I don't. I see this right now as we come into this close. The SPY is at 193.98. If it closes over the 193.65, yes, it can go all the way up to 196.60. You know, the Nasdaq. It looks to me like the Qs actually were at 96.82. And now this is a trip. So the number is 96.83. You know, we're at it right now. You close over 96.83, it will go up to 98.76. You close under that, you're going right back down. You stay right there, folks. We'll come right back. Thanks, John. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Natalie Goldberg. Follow what you love, and it will take you where you want to go. Market-wise, let's take a look at it out here. We had the Dow finish up 215, NASDAQ up 103, S&P's up 36, gold contract up $4, trading at $1,248 an ounce. Silver up 15 cents at $17.51 an ounce. Platinum up 13 at $1,280 an ounce. Copper up 4 pennies at $3.03 a pound. Light sweet crude flat at $82.81 a barrel. Bonds, he had the 10-year down 8 ticks at 127.17. 30-year off 21 at 142.14. King dollar up 412 ticks at 85.45. The euro down 84 at 127, and the yen off 4 at 106.91. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're up $35. You are over the 1936.98 level, and that's saying you can run into this 1967.68. If we go to the SPY, you're up on dramatically lighter volume, folks. This is a B to a C of an ABC structure on the way down. You get price going. The SPY closed at 194.07. A close over this 193.65 puts the SPY into the next swing up here, which is the 196.60. We did 148 million shares today. You're going into 221 million shares. In the NYSE, you did 801 million, and you're going into 948. NASDAQ Composite, we go take a look at the composite. Composite goes up 103 points out here today, 44.19. The composite looks like it's going to try to get into 44.64. In that correlation, when we talk highs to lows, by the way, what you do have at that particular level, the 44.20, which we're right at, is the 0.618. It looks like it's going to try to get into this 0.76 level, which is the 44.93 number. The NDX 100, now this is where this gets kind of interesting, but it closed over it, but check this out. So the NDX 100, the 3 Qs, we look at the 3 Qs. ICE in the 3 Qs is 96.83. The volume characteristic is 72 million. We did 52 million coming into that. We closed over it, so that's saying you can get higher. You can get up into this 98.76 area. But bottom line, you can see the dramatic shift in how we're going up versus how we went down. What is in play here is a 199-point ABC structure on the way down. Yahoo just come out with numbers. Let's go take a look at Yahoo. Yahoo closed at $40.17. That was up 89 cents. It's trading at $40.35 right now. Numbers go like this on Yahoo. The estimate was 30 cents. They made 50 cents. That is the bottom line estimate. Revenue estimate was 1.05 billion. They took in 1.09 billion. So in both cases, nice number. In both cases, Yahoo can't even move. Yahoo come off that high of $44. You're at $40.38 right now. Monster volume on the way down. You did 233 million on the way down. That was on the 19th. You went back. Counter trend bounce with 23 million. You come back down with volume coming out again, 41 million. This is just going to go against that swing point. I expect what you're actually going to see between Yahoo is that, well, here, this is going to be interesting watching this shake out because now Yahoo is up $1.60. 41.82. We go back and we look at that swing point. That swing point up there is 41.73. So your number on Yahoo is 41.73. We're at 41.82 right now. Cree. Let's go take a look at Cree. Cree, they developed, manufacture light class diodes, the LED lighting. That closed at $33.15. That is trading out at $30.34. And, man, this is these gaps, when they gap down, it's pretty amazing. The first gap on Cree was back in August. That's when it was with $50. It gapped down to $44. Then you had another gap from $40.88 in October 1st. Then it opened to $33. This is going to be the third gap. Let's see what we have here. Wow, this stock has got killed. Holy cow. So, yeah, this baby's going to the bottom of its range. The bottom of its range right now is 20.25. Numbers on Cree go like this. Their revenue is $427 million. Where did they miss here? The revenue trailed estimates. The earnings per, there it is. So earnings per share, the estimate was 24 cents. They made, no, the estimate was, oh, they've missed big. The estimate was 34 cents. They made 24 cents. BRCM, let's go, going to be a lot of numbers coming out here. Broadcom, that closed at 37.33. That is trading right now at 38.51, so that's up $1.50. And same setup there, though. You come off the highs, big volume on the way down. You're going into ICE, 37.91. That is how ICE is set up out here. 877-927-6648. Some of the high volume stocks in a low volume bounce out here, which you had today. Apple was out 271. Coca-Cola got smoked with volume on the way down. That was down 261. Intel was up $1. You had Facebook up $1.74. American Airlines was up 262. Let's go look at American Airlines, AAL, because the airlines folks are going south before this Ebola deal come in at all. People are blaming Ebola, but the bottom line is that airlines have been going south for quite a while. They had higher highs, dramatically lighter volume, and if we take a look at America's case, We put this on a weekly basis. Actually, you can't even bring it back that far. They've gone BK so many times. Amazing. Let's go to Delta instead. These airlines are a trip. So if we take a look at Delta, Delta's up to ice today. It was up $1.44. You're at 37.48. You got down. So 38.04. This is going to be interesting. So Delta can get it to 38.04 and then go back to $24. Big number, no doubt. Big Blue from yesterday. Big Blue got toasted, roasted. Did it again today, down to 587, 20 million shares. This is going to be a drag on the Dow for quite a bit. Big Blue, folks, is at 163 on its way to 116. What it did is that the 157 area, it does have some support at that area, 157.13. But what you're going to see is that we've already done 93 million shares. It looks to me like she's going to go after that number one, and we'll see whether she can break it with volume. That's the only support she has, though. And what had happened with Big Blue is this. Big Blue had gone sideways, okay, for such a long period of time that was monster distribution up at those highs. And what you did have, which is just amazing, as that distribution was going on, you had the aspect that Big Blue themselves was spending their own money, okay, their own money, buying the stock back, and now they're toasted and roasted. One of the largest owner of Big Blue, by the way, is Berkshire Hathaway. So I suspect that's going to take a little heat, no doubt. Berkshire has it in two separate funds. When I was looking at this, I believe it's 7.9% they own right now. And they were buying more at the last quarterly filing. The last quarterly filing that is up here was the June 30th quarter. What you did have is that they actually opened another position up in a separate fund. I'm not sure what that is. They had their largest fund is 70 million, and they have another 3 million. So they own 7.4% of IBM, and that, no doubt, is one monster hit. Intuitive Surgical, this is a personality stock extraordinaire, no doubt. Intuitive Surgical closed at $495. That is trading at $512 right now. Numbers on Intuitive Surgical go like this. The revenue is $108 million. Their earnings per share was $3.92. The estimate was $3.81. And Intuitive Surgical is at its highs 505, and you're at 514, so it's getting over its highs of last. 594 is the high. Yeah, this is 541. So this is going into where the downdraft got created in April, when it went from 541 to 353. Don't touch it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials finished up 215. Nasdaq up 103. S&P's up 38. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV, where you're feeling pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolute free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 215, Nasdaq up 103, S&Ps were up 38. And as we do each and every Tuesday afternoon at 20 past the second hour, we get our man Andy Hecht. Andy Hecht, folks, not only has a great show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. You can check out his newsletter, the Technomental Commodity Report. The way you do that, you go to TFNN, go to newsletters, go to trading newsletters. You can test drive that 30 days right here, right now, and that would be a great birthday present for him. Happy birthday, brother.
Thank you. Thank you for remembering.
Well, you know, it's
double
so funny.
Nickels, man. Double nickels.
Listen, man, I was going to text you at, it would have been 3 o'clock in the morning your time, because at 6 o'clock this morning on LinkedIn, I got a heads up that it was your birthday.
Oh, this is really? No,
Yeah.
I didn't even realize. I got some of those from the East Coast.
Isn't isn't that cool? I know.
Very interesting.
It is.
So, interesting markets.
Yeah.
I was listening to the first hour of the show in the first segment. I couldn't agree more. This stock market, it looks to me like it's setting up for, this is such a dead cat bounce here.
When you get moves like we did, meaning, down 199 points, which is unusual, when you get bounces and the volume contracts this dramatically,
Exactly.
that is a big number, folks, okay? Yesterday, so check this out. Yeah, I mean, today it contracted also, but yesterday, I mean, it's sick. Yesterday, the NYSE did 742 million And today it did 814 million. It's like, oh, really? It's like insanity, you know?
I know. It really is. It really is. And, you know,
that's how
and everyone wants to be, you know, everyone I listen to on the other networks, on CNBC, they all want to be bullish again. But it's, you know, the signs are there. The ominous signs are there.
I think what you can get out of a market like we have right now, folks, is this. And please remember it. But over the course of history, no one remembers it because you can go back to the 1920s, 30s, 40s, 50s. It doesn't matter. And this is the one part, not on a technical basis, folks, but on a fundamental basis that it blows my mind about markets, is that, as Andy just said, if you listen to, it doesn't matter what you listen to, people seem to think that markets have to go up, want to go up, and that's the only thing they're going to do. The real question is, do they actually believe that, or they just keep telling you that so they can collect more money? You know?
Well, you know, there is, listen, since they started these 401ks and all these types of accounts,
right,
there is money that goes into these markets all the time.
That's
there
right.
is buying that goes on all the time.
Right.
However, when you run into macro issues, what I really, you know, the money, the volume of selling sometimes just overwhelms that, and it just feels that way. I'm attributing today's action in stocks, in commodities, more to positive numbers that came out of China last night. They were, their gross domestic product was decent. Industrial production for September was decent, and that stabilized some things. But we're not seeing things run away here. You know, crude oil caught a little bit of a bid. What are we up, 57 cents? Copper caught a little bit of a bid. We're still around 303.
Yeah.
It's, you know,
I like what copper did. I can tell you. Well, what happened is this. I was watching SCCO, and I said, ooh, this is interesting, man. You know, because SCCO, you know, this is the largest copper company in the world, folks. That came down hard, man. I mean, it came down off 33 bucks, you know, got into a low 2 weeks ago of 27. Big juice on the way down. But, you know, it jumped into that juice today with decent volume. Not big. It's going to need bigger. But
I agree. It did well today. I mean, I put up just now a chart on copper itself.
Yeah.
Copper itself has just been making lower highs and lower lows, and copper to me is like the doctor, you know? It kind of diagnoses what's going on.
Yeah.
And I just, you know, the longer term, medium term, the action in copper, you know, we got to get back over 310 for this thing to start looking decent to me. Down here, it's just not, you know, it's lower lows and lower highs, and we've really seen that all year long.
Yeah, no, there's no doubt. There's no doubt.
It's telling me that, you know, copper's good for watching, you know, what's going to happen in the stock market. In terms of, like, my own analysis, I kind of key off it. If all of a sudden copper, we woke up and copper's up at 320, 330, I'd say, all right, maybe this correction is over. But copper, it's got to catch a bid, and it's not catching too much of a bid. You know, Shanghai stocks in copper went up like 17.5% last week. That means that the Chinese moved some of their stockpiles back into the market, which that's a little bit worrying for me. I mean, I'm not overly bearish copper here. I don't want to sell it into a hole, but would I be surprised? It flirted with that $3 level a lot.
No, it did.
Hold that.
What I liked, last Tuesday and Wednesday, it got down to that 295. That 295 was basically testing the March lows. And, you know, at this point, it rejected them and got back inside that $3. And, you know, that's what it had. Well, 298.55 was the number it had to get back inside. So, you know, we'll see how it shakes out.
We'll see what happens there. I mean, looking around the other, today is very much kind of a relief day. I'll tell you, the oil market, to me, the more I watch this market trade, the more I think that oil price is being totally managed here by the Saudis, by us, by a lot of countries. And this is the sweet spot for oil, really, I think. You know, somewhere between 75 and 85 bucks is the sweet spot.
Well, it's, you know, we got down. So today you did 283,000 contracts.
Light volume day.
And that's not bad. You know what I mean? It's not the end of the world. So it's like, you know, the real question is this 77 wide open? And thus far, it still is, man. You know.
Take a look at the chart I have up here, Tom.
Yeah.
This open interest in oil.
Yes.
Back in July, we were at 1.75 million contracts. Now we're at like we're under 1.5 million contracts. Basically, the specs, a lot of the specs are out of the market here, and it's kind of, I expect the range to kind of narrow here. I don't expect to see big, we saw the big move. I think it feels like it's range bound now.
And the range you're looking for is what?
75 to 85.
Okay.
But that's kind of that's what it feels like. We'll have to see. I mean, you never know. But for consumers, this is a beautiful thing. Look at
huge,
gasoline prices, $2.15 a gallon, baby.
Yeah, it's pretty amazing. There's no doubt. And
amazing.
Yeah.
Now, natural gas broke down, I think. I saw it trade down below 370. I didn't like that action. We're kind of, we're back at 370 now. We traded down to 363. That's the lowest price of the year.
Okay.
Inventories have been building. We're still below last year. We're still below the 5-year average. But what's happening is very unseasonably warm temperatures. And I'm headed off to New York and hopefully that holds.
Oh, you're going to go see your son?
I'm going to see my sons. I'm leaving early Thursday morning, and I'll be off next week. But cool. I will be in New York and seeing my boys, and I haven't been in New York in a year, so I'm looking forward to it.
You're going at the right time too, man. No doubt.
Well, I'm going before it gets too cold.
There's no doubt about that. Yeah.
But the natural gas, kind of uninspiring here.
Yeah.
Commodities in general, if I look across the board, a lot of backing and filling going on. Coffee really dropped. You see that?
Yeah, I did. No doubt.
Wow. That was ugly. But, down 180, 190, back in the buy zone.
Nothing like it. Well, listen, man, happy birthday. We look forward to the show at 5 o'clock, man.
Thanks. I'll talk to you November 4th.
You sure will, man.
Take care.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless investor on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finished up 215, Nasdaq up 103, S&Ps are up 37. And don't forget, folks, at TFNN, we broadcast 10 hours of live content every trading day. You can get that content right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, you just go to tfnn.com. You'll see the TV on the right-hand side. Hit that. You can get the audio, plus you can get the video. Now, as you're over at TFNN, what you're going to see in the very front page is you're going to see a special that we have right now. Let's get started on the path of least resistance for just $1 a day. If you have tuned in to our man, Mr. Dave White, he's on every trading day, 1 to 2 Eastern Standard Time. Me and him do a show on Fridays from 4 to 5. Bottom line, the path of least resistance right now, we're doing a special on. You get the first 30 days for only $30. This is a great newsletter. If you happen to, when hearing either David from 1 to 2, or when he was on my show, our show, rather, 4 to 5 on Fridays. Bottom line, he had a lot of great trades in there that he took down. So this is a special that you can get $1 a day, $30 for 30 days. That's the first part. But then what you can also do, and that in itself, okay, is a huge discount, biggest discount that ever been offered. But on top of that, you can also lock a price in of $95 a month on an auto renew. So check it out on the front page of TFNN. You'll see exactly what that deal is all about, meaning the path of least resistance. I know, it's really wild. As one of the Tigers telling me, that's right, I do 3 to 5 now. You got to love it. What's so wild about that, too, folks, is that when I actually look at it, so we're in 2014, I think I'm pushing 20 years right now, which is just a mind blower, man. That blows my mind. So when I changed the hours, I think I was on for about 19 hours from 4 to 6. Pretty wild. It's a quick 19 years, I can tell you that. 877-927-6648. Some of the high volume stocks in this market that had no volume go like this. Apple was up 271, 102.47. Apple's approaching its highs, has no juice up there, but yet is approaching its highs. Micron Tech was up $1.50. Coca-Cola down 261. Coca-Cola, large cap, wants to go a lot lower. Intel up 103. Facebook up 174. American Airlines was up 263. Owen Financial down 478. That thing is toast. That was some of the higher volume stocks. Inside the Dow Industrials, what we had is this. Caterpillar was up 186. You had Disney up 202. Oxy was up 233. International Paper 143. JP Morgan was up 130. Now let's go over to the financials, the XLF. Financials up 42 cents today, 50 million shares traded. This also is a very large ABC structure on the way down. So when we take a look at the financials, your 8-point on this, the XLF is 23.88. You come down with some big juice. Today we did 50 million shares, and that 50 million is going into 89 million. Berkshire Hathaway, BRK. Now, I want to see what's going on with this one here. This is going to be interesting. So Berkshire today was up $1.74. The high in Berkshire Hathaway is 142.45. That high actually looks like it's going to get tested. Why? Because he had volume up there. So the bottom is maybe where the test is going to take place, meaning at 140.30. But watch this now. So you have a high volume high that wants to be tested. Then you came off the high with volume. So then you go down with 8.5 million. So what do you do with something like that? So watch this. Let's bisect and dissect this. This is pretty cool. So your first part goes like this. This is dynamite. Oh, this is going to be a trip because we're going to tie this together. Okay. So you have a high volume high. You got Warren Buffett, big numbers on a continual basis. 140.30 wants to be tested. You do 9.4 million. We come down with 8.5. We went back up today with 4.1. So the test is going to be with probably 5 million versus 9. Then what I expect you're going to get is you're going to reverse right on the other side, and you're going to start heading down into the 132 area, or at 138. That's on your daily. We take this and we put this on a weekly, and what you have monster volume off the highs. And this would be set up that you're going down to 122. If it can't handle 122, you got 112. We take this and I put this on a monthly. So watch this shake out now. We put this on a monthly, folks, and there's monster volumes here, meaning Berkshire Hathaway can come down dramatically. So that's on a technical basis. Now, let's do a fundamental basis. We know inside the context of IBM that Berkshire Hathaway is the largest owner of IBM. Okay, so you know that professional money managers better be basically wrapping their head around this very quickly, because in this particular case, you're talking about big numbers, not small numbers. Berkshire Hathaway, right now, as of the last filing, owns 73.5 million shares of IBM, okay? When we take a look at IBM, what do you have? Bottom line is that, IBM has been going sideways at the 190, 200 area. Now you're at 163. All you have to do is do $40 times, what did I just say, 73 million shares? Big money, right? That's not all, though. Where are we going next? Coca-Cola. You know the amount of business, that PR that Warren Buffett has got Coca-Cola is absolutely extraordinary. Why? They own 400 million shares. They're the largest owner of Coca-Cola, 9.1%, 400 million shares. So if we go back to Coca-Cola and we take a look at Coca-Cola and we put this up, what you have in here on a monthly basis is this, is that Coke couldn't handle its high of $43. Then, so now the way it's set up is it wants to go to 35. Now, this is what you do have, okay, is that the aspect of the price that he owns Coca-Cola at is much cheaper. So it's not like Berkshire Hathaway is in a losing position. However, when you go back over to Berkshire Hathaway, BRK, what it is that as those stocks have gone higher, of course, Berkshire Hathaway goes higher. Well, guess what, folks? When they go lower, bottom line, they're going to go lower. You know, so this is going to be interesting to watch how this whole thing is going to shake out. You know, because in the course of 2 days, that's a pretty incredible number when you take a look at both of those. And in fact, in the course of 2 days, when you get two of the largest, great marquee companies in the world going south like that, it is a huge number. And if we go back over, so let's go back over to our benchmark. The benchmark, we know that the oil and gas sector has already hit the benchmark, meaning the February benchmark. IBM, that February benchmark, IBM blew it away. The benchmark, the benchmark in IBM was basically 172 or 163. We go over to Coca-Cola. We take a look at that February benchmark in Coca-Cola. Right now we're at 40.68, and there she is. Okay, so February. Okay, we're making our way down to it. So Coca-Cola is 38.11 to 36.89. We're making it down. We're making it down with volume. XLE not only took it out, blew it away. That February 5th time frame, folks, is a big number that you absolutely want to keep your eye on. And just to remind you where that is on the S&P, on the cash S&P right now, we're at 1941, and this is a big draft down the other side. The top of it is 1798. The bottom of it is 1738. You know, so that these large caps have croaked. Oh, let's go to McDonald's. Let's see how close McDonald's is. Because what you're going to see, sector by sector by sector, make their way down there. That's kind of how markets move, period. If we go take a look at the McDonald's, yeah, McDonald's already blew it away. McDonald's was $92.22, the bottom of it. We're at 91.01, and McDonald's blew it away with volume, by the way. Last week, McDonald's did on a weekly basis 36 million shares, taking out 30 million shares. McDonald's is on its way down to $85. And I suspect what you're going to get, McDonald's must be just going out of their mind, folks, that they basically pushed off Chipotle. I mean, if you didn't, know this, McDonald's basically started Chipotle. Well, there was one guy that started, had a bunch of them. McDonald's took the concept, ran with it, not fresh food, and in the context of where Chipotle's going, yeah, it was down $45 today, and it's going to go low. It's going to go down. We're at 607. Once to get on a 682, can go dramatically lower than that. That's on a short-term basis, though. Chipotle has just gone from $81 up to $700. So yeah, big hit, no doubt. But what you have is, as to where the business is coming from, the business is coming. Chipotle's getting that business, folks. Big Macs, worm burgers, see you later. This is Tom O'Brien, this is TFNN. Dow Industrials, let's see. Closed up 215, NASDAQ up 103, S&P's up 38. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And this is, I want to thank Danny from Atlanta in the Den when we're talking about Chipotle. So this is, so McDonald's actually, I believe that actually never ran Chipotle, but check this out, folks. This is pretty intense. So McDonald's invested in Chipotle in 1998 when it had 16 restaurants. It ended up putting a huge amount of money in. They actually put $360 million in 98. That got the chain going from 16 restaurants to 500 restaurants. When Chipotle went public, McDonald's sold it and they took in $1.5 billion. The bottom line is that that $1.5 billion would be worth $15 billion right now. They sold it out at $55. Bottom line, though, I do expect the thing that's amazing. So if you look at the McDonald's press releases out here today, what they're pushing out here today, McDonald's here it is right here. McDonald's Corporation, which posted its fourth straight quarter of falling U.S. same-store sales, may look to sell more organic food to stem the loss of customers to change for better quality. You'll see some categories looking to different products, possibly organics. Chief Executive Officer Ron Thompson said in a conference call, we actually are doing it in certain markets. What you have is with McDonald's is this. They're going to make the switch. They're going to make the switch quick. And that's going to be a really tough deal to do inside the aspect that, you've been selling stuff that, has huge calories, all the above, versus getting into fresher foods. They certainly have the real estate to do it. There's no two ways about that. The real question is, do they have the guts to do it? One of the hardest things, and you can see this in all these large companies, folks, one of the hardest things to do is to basically make the turn and push a good product out. If you've never been a Chipotle, one of the main reasons I think Chipotle makes so much money is the overhead is absolutely zero. Fresh food is fresh food, and that's good too, but the reason that they can grow so quickly is that when you walk in, it's just a bar. It's a bar that's set up. You tell them what you want. It's a very small menu. It's in, it's out. The cafeteria type stations, you can grow a company very quickly like that, I suspect we're going to see more restaurants like that in the future. What you absolutely have, now I haven't been in a McDonald's lately. In fact, I think I'll go in one just so I can see. When you do go in Chipotle's, there's a huge amount of young people, huge, and they like it. And, they talk about it in school, and that's where they want to go. I'm not too sure if, in fact, they have that same setup in McDonald's. Last time when you see a McDonald's is like a family place. You bring the kids, you get them, fat and happy, and that's kind of how it goes. So pretty wild watching it shake out. After the close out here, Yahoo came out with the numbers. Yahoo closed at 40.18. That's trading at 41.26. 41.26 is where the swing point is. It's actually 41.73 inside Yahoo. So we'll see whether it can get up and over that level. My take is that more than likely you won't see that happen. Cree, after the close out here, Cree's getting hit pretty good. That's down $4. That is the third gap away on the way downtown. Apple. So Apple right now, Apple was up 271 today, 102.71. The high that it's going after is 103.74. Now remember, on a weekly basis, this is the benchmark on Apple. On a weekly basis, it's 100.72. That is the high that was generated in September of 2012. We had tested that high 5-6 weeks in a row, closed under it closed above it every single week until 3 weeks ago. This week here, we'll see how it shakes and bakes. Bottom line, right now it's making a run for the high, which is that 103.74. Thus far, Apple's still saying it wants to go down to this 96.75 to 95.18 number. That's how it's set up. Don't forget, folks, our man, Mr. Dave White, he has a great special that's going on right now, the Path of Least Resistance. You can get it for 30 days for $30. Normal price is $95 a month. If you do go test drive it for 30 days for $30, $1 a day, you can lock in that price of $95 a month also. As you're going over there, you'll be able to take a look at his Power Law Vector. You'll be able to see the trades that Dave pulled off on this recent nice volatility inside the marketplace. Don't forget our man, Mr. Andy Heck, is going to be coming up next, and give him a big call, folks, because it's his birthday today. He's 21 years old. How good is that, right? It's a beautiful thing. So, market-wise out here tonight, when we go to the Nikkei, Asia's going to be opening up in a bit. Nikkei last night was down 300. What was intriguing is this, is that the Asia themselves, okay, traded down last night. And, yeah, he's 21 times. That's a beautiful thing. Bottom line is that it still looks to me like the Hang Seng, it doesn't look to me like they're going to get any traction out here tonight. Why? What you have is that you've been in this downtrend for quite a while. Hang Seng just went from 25,300 to 23,000. You have the high volume swing low out there of the October 3rd. That wants to get tested, which is 22,565. So you'll be able to tell a lot how Asia is trading tonight, because if Asia can't get any traction with a market, our market meaning up, the Dow was up 1.3, the NASDAQ was up 2.4, and then S&Ps were up 1.9. That is going to be screaming that the Dow, that the Europe wants to pull back as well as us. Inside the bond market is absolutely screaming that it wants higher price, lower yield. With the market up as much as we were up today, the bonds still couldn't get back to their day of strength. Right now, the 10-year is yielding 2.2. And if you do go look inside the real estate market, what you'll see, folks, is that these builders, they went to higher highs, have some juice behind it. They're going to have to build a little more cars. But bottom line is that these rates are going to get lower, stay lower. And what that does, of course, is that puts juice behind the real estate market. Why? Real estate's all about what you can sign for, folks. That's what it comes down to. Fannie Mae, Freddie Mac, they're coming out with a few new regulations, and the cycle starts all over again. You know, I've seen 3 of these cycles, by the way, folks, and what happens every single time, folks say it can never happen again. Well, guess what? Another 10 years from now, you're going to see another implosion. The whole thing's starting again. Oh, which totally makes sense. We started in 2007. It's 2014 right now. Cycle 14, 15 years. You stay right there, folks. Mr. Andy Heck's going to be coming right up. Dow finished up 215, NASDAQ 103, S&P's 39. Look forward to speaking tomorrow, folks. Go get them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.